What's going on, guys? Josh Baldwin here from Mad Money Millennial. Now, before I begin, I once again ask that you, and of course, that subscribe button would love your attention as well. In this video, I wanted to talk a little bit about real estate. More specifically, I wanted to cover how to calculate home equity and your loan-to-value ratio. So if you're thinking about taking out a home equity line of credit, for example, the amount of available equity you have in your home plays a very important role in determining if you are eligible. Now, your home equity can be defined as the difference between the appraised value of your home and your current mortgage balance. So the more equity you have, the more financing options become available to you. So in this case, what you do is simply use either a home equity loan or line of credit to cover the difference. This is what's called a piggyback mortgage. Now, what do I mean by that? Basically, what will happen is when you're ready to purchase the house, the lender will ask you for your 10% down payment, your mortgage will cover 80%, and the remaining 10% will be financed out of our equity loan or line of credit. So it will essentially be an 80-10-10 split, where the extra 10% is what's considered the piggyback portion. Okay, now I'm hungry and I desperately want bacon. By the way, if you like bacon, you should go ahead and hit that like button because that makes total sense. Okay, so calculating your loan-to-value ratio. Your loan-to-value ratio is another way of expressing how much you still owe on your current mortgage. Here's the basic loan-to-value ratio formula. For example, say you currently have a loan balance of $140,000 and your home currently appraises for $200,000. So your loan-to-value equation would look like this. Convert 0.7 to a percentage, and that gives you a loan-to-value ratio of 70%. Okay, now how do we calculate the combined loan-to-value ratio for more than one loan? Well, for one, if you were considering a home equity line of credit, you would add the amount you want to borrow or the credit limit you want to establish to your current mortgage balance. From here, this would give you your combined loan balance, and your combined loan-to-value formula would look like this. Now, for example, say you currently have a loan balance of $140,000 and you want to take out a $25,000 home equity line of credit. Your home currently appraises for $200,000. So your combined loan-to-value equation would look like this. Now convert 0.825 to a percentage, and that gives you a combined loan-to-value ratio of 82.5%. Now most lenders would require your CLTV to be 85% or less for a home equity line of credit. So if your CLTV is too high, you can either pay down your current loan amount or wait to see if your home's value increases. All right, now the appraisal. A professional appraisal is an essential part of determining your loan-to-value ratio. So if an on-site appraisal is needed, your lender will arrange for a certified appraiser to come to your home and estimate its value. Okay, now how to impact your loan-to-value ratio. So one of the best ways to help reduce your loan-to-value ratio is to pay down your home loan's principal on a regular basis. Now this happens over time just by simply making your monthly payments, assuming that they're amortized. That is, based on a payment schedule by which you'd repay your loan in full by the end of the loan term. Now you could reduce your loan principal faster by paying a little bit more than your amortized mortgage payment each month. You can ask your lender if you will have to pay prepayment penalties if you do this. Another way to impact your loan-to-value ratio is by protecting the value of your home by keeping it neat and well maintained. Making smart improvements could positively affect an appraisal. So it's always a good idea to consult either an appraiser or a real estate professional for advice before investing in any home improvements. It'll save you a lot of money. Now keep in mind that economic conditions can have a negative impact on home values regardless of the improvements that you make to the home. Now that you know how to calculate your loan-to-value and combine loan-to-value ratios and how you can impact them, you can hopefully make more informed choices to help you reach your financial goals. Whether you choose to borrow from the equity in your home, refinance, or simply continue to pay down any current home loan balances. Now, thank you for watching. Thank you for subscribing. Stay safe, stay hustling, and I'll talk to you guys again soon.